Great. Welcome to Digital Asset News. Take the top stories in crypto and break it down into bite-sized pieces. So today, just as the thumbnail and the title suggest, we're going to take a look at exactly what's going on with the market and if potentially this could be one of those big things that happens as far as like the stock market, if it collapses, and also what's going to happen with this power curve. So we'll take a look at all those things. And what we need to take a look at actually is Celsius founder Alex Mashinsky talks about recession, stocks, and Bitcoin price prediction this year. Also, we're going to talk about where are people exactly in the crypto adoption cycle. And I'm going to use my brother as an example. And this is going to be interesting. And lastly, we'll take a look at the law of diminishing returns and making that 5% case for risk allocation. And then we'll talk about my 5% risk plan with accountability. So we'll go over all those things and also do a Q&A at the end. So hold your questions, because I'm sure you're going to have a ton of them today. And let's get into it. So first up, if you're here for the live stream, welcome. Happy Easter. I just figured people go to church in the mornings. We have friends and family over, and then maybe towards the later part of the day, you might want to just take a break from all that stuff. So I thought I'd just throw out a little video real quick. But if you're here for the live stream, welcome. Thanks for stopping by. If you're watching the replay, timestamps below, all that good stuff. News takes about 15 minutes. This one might go longer. And then we'll get into the Q&A at the very end. So let's just jump into it, It was all about this. It was all about, this is what got the wheels turning in my head, which was Alex Mashinsky. He was on Kitco News. This was during the Miami convention. And he just talked about some different parts of he gave a price prediction, which I thought was crazy. He talked about recession, which I thought was sane, and then some other things in the middle. And it was just interesting. Actually, first, I should really just take a look at the market just for posterity here. Happy Easter, everyone, like I said. And then also, this is the market in general. And Sundays are never good. It's always a dump Sundays, He may have risen, but that doesn't mean our market's going to. And we've got a little bit of a slowdown, except for Solana, 1% up. But everything else is in the red or just chopping sideways. It's quite boring, quite honestly. And when things are boring, that's why I'm a little bit more excited, because I get to plan, I get to buy, I get to figure out what the heck I'm going to do in the long run. So that's what it really comes down to. And that really got me thinking because of this video that I tweeted out last night. And it's about a couple minutes. And he's sitting there talking. This is Alex Mashinsky, if you don't know, from Celsius. Good guy. Had on the show a couple times. And is doing good things for the community. However, there's been some new things that have come about, just so you know, that, again, we had talked about this in detail. If you're outside the United States, don't worry about this. Doesn't apply to you. But if you are in the U.S. and you are a non-accredited investor, or even an accredited investor, you're going to see this. And what this is it states when you open up your Celsius account is like, look, your Celsius account is now divided into two accounts, the custody and earn account. Your custody account is for transferring, swapping, and borrowing coins. Your earn account is for earning rewards. That sounds good. However, the custody part is your home base for crypto transactions at Celsius. All crypto purchases or transfers go into your custody account first. Coins in your custody account can be sent, swapped, or used on a loan collateral, but they don't earn rewards. Why is that? Well, it's because sounds like they made a deal with the regulators, and if you're a non-accredited investor, all you're going to be able to do is do custody. You won't be able to do earn. And they put it out they made this very clear when I opened up my app today. Coins in your earn account will earn rewards, but can't be sent, swapped, or used as loan collateral. You can transfer coins between your custody account and your earn account whenever you want. And transferring coins into the earn account is only available to accredited investors, people who make $2 million or more, or $200,000 or more, or have a revenue of $5 million for their corporation. If you're not an accredited investor, transferring coins out of your earn account is a one-way street, meaning people before April 15th, like right now, I'm listed as a non-accredited investor. I'm not going to put the paperwork in. I think it's unfair, but it doesn't matter. So everything that I put in before April 15th, I'll still earn rewards. But if I ever transfer that out, can't go back in unless I want to become an accredited investor. That's what's going on. And that's what's happening within the world of Celsius. But I thought this was interesting that Alex comes out and he talks about this. And there's some parts I agree, some parts I don't. I'm going to have you listen to it and you make your own decision about where we are here. So first of all, let me stop this screen. Let me share the tab because that's important. And what I'm going to do, so you can hear it, let me mute myself so there's no echo. I want to make sure this is good audio.
Putting liquidity into the market, taking liquidity out of the market, all of that with us shutting down the 9th largest economy in the world, Russia. We basically effectively shut it down. That's a huge recessionary pressure on our economy. So I do expect a recession next year, 2023. I don't think there's anything the Fed can do. We will have a recession next year.
So to be clear, you believe that there will be a recession next year.
Yes.
Therefore, you've gotten out of equities, but you still think that this is good news for Bitcoin and the crypto markets?
Yes. So I think Bitcoin and Ethereum are going to do very well.
In this recessionary environment?
So from now to the recession and during the recession. Yes. Because basically we have a bridge between TradFi or traditional finance and CeFi, and then another bridge between CeFi and DeFi. And those bridges are now being built and being expanded on, right? That's part of what Celsius does. More and more money is going to flow from traditional finance into CeFi and DeFi because it's going to escape. It's going to escape TradFi, right? There's nowhere to put money in. All the assets are inflated, right? Real estate, bonds, stocks. It doesn't matter. You can't hide anywhere. Even if you want to buy commodities, most commodities are at all-time high, right? So where are you going to park your money? So the best way to do is to move it over to an industry that is not correlated to the US dollar.
And you're seeing that lack of correlation increase. So David loves to ask the price outlook question. So what does that mean if you're seeing all of this money now flowing out of all of these other assets and into cryptos and Bitcoin? I guess let's start off with your Bitcoin price outlook.
So I think we're definitely going to hit all-time highs. So all-time highs are not that far from where we are. It's $67,000. And the question we don't know is what happens afterwards. How much resistance we're going to have at 70, 80, 90,000. I think we are going to break $100,000. I know I've said that last year, but we had a few macroeconomic events that are basically kicked the can down the road. But we will see Bitcoin over 100,000 this year.
Thank you for the pass, Michelle. I was going to.
So that's all we have. So let me know what you think about that in the comments section. And it could go, I mean, either way. I sure hope Alex is right here, but I just don't see it. I don't see 100,000 Bitcoin this year. And I don't really see, I totally understand what he's talking about here, where he talks about there's no place else to hide. I mean, you can't put into stocks as overinflated. Treasury bills and T-bills and bonds, that's not going to work out because it's the same thing that's going on. Commodities, perhaps. Real estate, no, because everything's super inflated. So where do you put your money? The thing is, how many people really trust crypto and really go into it? And I think that's the broader, bigger question. Again, I hope he's right on this one, but I totally agree. We're headed for a recession. Everybody talks about it. There's some data that backs it up, and then, talk about the 2 and 10 year treasury bills or bonds flipping. I mean, but it flipped right back. And then also, if you take a look at GDP, there is some growth. Yes, that's true, but I don't see how there can't be stagflation or stagnation when we have massive issues with inflation and money printing and super inflation and the Fed just going crazy and buying up things and just controlling it. And then also we have a problem with the supply chains and different lockdowns going on in China. I just don't see how we can produce goods and services at a faster rate to not have a slowdown in GDP. That's just my thesis. So when he talks about this, like where are you going to hide, it does make sense, doesn't it? Like where else can you go? This market is it's under $2 trillion. Let's be honest. The problem I see is part of this. And let me just go into, which leads me to my next point, which is where are people in the crypto adoption cycle? And I'm going to use my brother as an example. So this is a text message between my brother. I love him. He is what he is. And I just asked him, I go, hey man, I hear a recession is coming fast. Where are you putting your money? And before we go on, I just tell you, like, Eric, my brother, he's a big investor. He's invested in Visa, is always bragging about it. Visa, 15 years ago, good for you. I don't know what Visa is going to do in the future, although it is investing in crypto and digital assets. So that's good, but I think they're still going to get blockbuster in certain ways. And I was like, look, what are you doing? And I said, where are you putting your money? And he says, my investments are being handled by Creative Planning. I'm like, great. So what are they doing with it? What are they allocating to? Bonds, T-bills, commodities? And he's like, it's invested. It's diversified. And I go, yeah. So if it's diversified, where's it going? Is it 10% equities, metals, bonds, or is it all stocks? What is it? Crickets. So I think, in all honesty, this is how I see things. Tell me if I'm wrong. Tell me if I'm way off. I think people are complacent. I think they've had if you're in the stock market or traditional equities, you've had such a run up for so many years. You're just like, we're fine. America will print its way out of money. And even if they understand inflation and what's going on, even if they don't understand crypto, I think people are so complacent because they've just been in this situation for such a long time. Just like, I got a money manager, it'll happen, or I'll just keep on doing it into stocks or even bonds, which are awful. And they just kind of get around to it, which leads me to my next point. And I don't know if this is for everybody, but I will say this: what's the crypto adoption globally? And that's a good question, which was answered by AAA-IO. And it was a pretty good way to look at things. And they take a look at a bunch of factors. And they stated, as of 2021, we estimated global, that's the key word here, global crypto ownership rate at an average of 39%, or 3.9%, which is still a lot, with over 300 million crypto users worldwide and over 18,000 businesses already accepting crypto payments. And I can understand, like Rob, with the S curve, because it starts off slow and it really accelerates. That's true. But how long is it before we hit that acceleration point? I don't think we're really accelerating super quickly like we should have if we wouldn't have some factors in place, which I talked about before. I'm not going to talk about it here. But now it breaks down to countries. The top countries: India, 100 million people that are either using, transacting, investing into crypto. The problem with India is that they just got dinged because they had over-regulation. It wasn't regulation, it was greed. Taxation by the government's entities. They're going to tax them at 30%. Plus, they can't take any deductions for losses. They can't gift it. And they also take a 1% hit for each transaction. It's pretty awful. So India, right now, that is crushing India. So even though that number, which I think this was in late 2021 when this came out, early 2022, that's getting crippled right now. USA, 27 million, sure. Nigeria, 13 million. Vietnam, 5.9. And UK, 3.3. Then it breaks it down by other countries: Ukraine, Russia, Venezuela, Kenya, USA, South Africa. And what's interesting to me is how they talk about it. And they state, like Ukraine, I'm pretty sure it's much more, especially with what's going on. I can't say it's much more. They're getting more donations. I don't know how much they're actually using it because of the war right now, or whatever you want to call it. I don't care. Ukraine Global Crypto Hub. Ukraine sent 8.2 billion worth of crypto and received 8 billion worth from July 2019 to June 2020. I'm pretty sure it's way higher now. And then if we take a look at the USA, my favorite, in 2018, a survey conducted by ING found that 57% of Americans had heard of crypto. My brother's heard of crypto. Both my brothers have. They don't invest into it. Ownership levels are significantly higher among the very wealthy. Out of the surveyed owners, over 70% of them have an annual income above $1 million, 33% income between $500,000 and $999,000. And of course, it tapers off after there. Majority of the U.S. crypto owners are between 18 and 44. And only 5% of them are 55 and above, which if you take a look at different statistics, you can see that the boomer generation is the mass amount of wealth that is in this country. I don't know how it is in different parts. Cryptos are largely owned by young, tech-savvy, and wealthy Americans, highly educated Americans, more likely to own crypto. 70% of them hold a doctorate education, 9% of. So what I'm trying to say here in gobbledygook is just saying that there's a lot of people that have heard of crypto. They want to get into crypto, but I don't think they're really getting into it and they really trust it at the maximum level that they should. And I think really what it comes down to is people are just like, you know what? I've done really well in stocks. I've done really well in treasury. I've done really well in metals and gold. And they stick to that and they're just kind of dipping their toes into it until a big collapse comes. And until a big collapse comes, me personally, I think people are like, let's be honest, just between us, people are lazy. And they're just like, you know what? Not everybody, you know what I mean? But I think they're just like, you know what? I'll wait till the collapse because it's not coming. Because everybody out there has been screaming the sky is falling forever. Listen to all the name your person, and you know, then they're like, it hasn't happened yet. So once this recession comes and things really fall apart, I think then they'll get into it. I just don't know if the thesis is correct that everybody or a large portion or a good amount are going to just say, you know what? I know that the price of eggs went up. I know the gasoline went up high. I know what electricity went up super high and all those things. I'm going to take all the money that I have in the stock market and I'm just going to stick it right into crypto. I don't think that's going to happen. I could be wrong. Let me know in the comments section. Kind of leads me to my next points. Law of diminishing returns and making the 5% case for risk. This is how I see things. Just me, not investment advice, just investment opinion. So this is Ben's website. We've used it quite a bit after I discovered it. It's great. And I like Ben from In the Cryptoverse. Good guy. He always does the DCA stuff. And this is the crypto market cap and trend line. And you can see here that, yes, right now, the red band is the fair value. And right now, the fair value roughly today should be about 1.5 trillion. Upper band is 9.7. Boy, I wish it was there, but it's not. Low band is 484. And even if it comes down, that's like, what, 16, 17%, somewhere around there? I don't know. But it will go up over time, and we should see great things. So, like, even if there is a recession, for me, I always think to myself, who cares if there's a recession? I'll just hold on to everything and just ride it all out. And you can do that. Or some people would say, I'm never selling anything because I'm just gonna get loans. And you can do that too. I've done both of those things. But I'm just here to tell you, like, if you do loans for crypto, just know that as the market starts to fall, if you haven't adequately collateralized, you will ask to be more collateralized. And if you don't do that, you'll be liquidated. Take it from me, because I took out a reasonably sized loan on Celsius to pay for, or part of the payment for a house on Puerto Rico. And as the market started to slip down, they're like, hey, Rob, you are not collateralized enough. So, okay, I got to add more Ethereum. And then it would go down farther. Rob, you're not collateralized enough. You need more Ethereum and more Ethereum and more Ethereum. So just know that's how it works. I think it works pretty well for like miners, crypto miners, because they can just take a loan and they can roll it into their infrastructure and they can just start, mining more Bitcoin or more Ethereum until we go to a proof of stake, I guess, for Ethereum. And it works pretty well for them. And then if they're like, oh, your loan is under collateralized, no problem. We got some new mining rigs, fire them up. More Bitcoin comes out, they over collateralize, they write it all out till it goes out. That's it. The question is, can you do that? Can you over collateralize without being liquidated? I think that is the bigger question. And it's not for me to tell you, because I'm not your dad. So it's up for you to decide, is this what I want to do? Again, hold on to things, get loans. It's a wide open space, but I can't tell you what to do. I'm not even a financial advisor, for Pete's sakes. Which leads me to this point. What's great about Ben's website, real quick, is that everything he talks about, he describes what it is, and he has a video for it. So it'll tell you why and how he comes to those conclusions, which is great. Data is nice, right? But there's this part here, it's about a minute long, and it leads me to a conclusion about risk. And I think it's something to consider. We'll say that. So let me share the tab itself. And this is a minute long, not very all-encompassing, but just take a listen. Let me mute myself.
That is when most people do not like to accumulate. And then you also have these periods where we go into mania bull runs that last for years sometimes. And so far, this one that we're currently in has been by far the most tame. But this isn't really that unexpected. It's all in it's all in line with the idea that every cycle is more or less going to give you some form of diminishing returns. And look, diminishing returns is a scary word for a lot of people, but it's just a fundamental thing that we have to acknowledge, and it's something that will likely happen within our favorite asset class. It is much harder to move the asset if it has a much higher market capitalization. That's why Bitcoin once upon a time was able to go from a market capitalization of basically 0 to 100 billion in one market cycle. Okay, it can't do that anymore. It can't go up 3 orders of magnitude, more or less, in one market cycle, because it's too hard for it to do. Crypto back in 2020, we were at about 100 billion. And so far, we actually have gone up at least 1 order of magnitude. But to give you an idea, a 3 order of magnitude change would put us all the way up at 100 trillion, which again is just highly likely not going to happen this market cycle. Although I do think we will make it there eventually.
Oh, sorry. So it makes sense, right? In the very beginning, it's always talking about it's best to get in early, right? It's as best you can. Now, a lot of these back in the day, 2012, 13, 14, there's still a lot of trash out there that really doesn't work out too well. And it's just important to find those right projects. But what Ben said is exactly correct. And it's diminishing returns as time goes on. So yeah, Bitcoin could do very well. And it's the safest thing right now. It's the most, to me personally, it's the safest asset and the most volatile asset class out there. So Bitcoin and Ethereum are a pretty safe bet, which leads me to my point about this, which is when I talk about risk, because it's going to get risky as time goes on, right? So this is one of my strategies as I start to pull money out, because everybody should have a plan. Fail to plan, you're planning to fail, right? So this is just the percentages that I've talked about this many times in different videos. And there's one that I just added today that I want to talk to you about. It's this one. It's the 5% risky players. I call it the Dan Degen play. And that is the one right here we're talking about. Although I will say this, there is a quick update over here where I talk about staking, Solana and Avalanche and Ethereum, Polkadot, Theta, Cardano, all that stuff. There's a great website if you don't know. It's stakingrewards.com. And when you go in there, you can just see, what I like about this is it shows you, how much has actually been staked, the cap or how much the stake value is, which is interesting. Solana is number 1 at $40 billion right now. Ethereum is on the tail. Terra is pretty close, and Cardano is 3rd. Total staked between 70 and just it goes down the line. But what's great about this is you can go to you can click on Solana, and you can put in the numbers that you want to, and just say, well, if let's go here. Let's say you have 100 Solana. Over a year, the average reward is around 6% or something like that. The term is 1 year, delegate soul, and so on and so forth. And then you can go down here and you can find different delegators. And where's the other stuff? Then also staking providers. You can go find it on DeFi as well and just take a look at all the yield, the exchanges, the different wallets. Personally, for Solana, you got Phantom wallet. I use that, and works out pretty well. And it's just everything you want is right there. So just so you know. I put the link in the description so you can find it and do the best thing for you. But the 5% risk case kind of comes down to this. It's what Peter Thiel said. And he once said this, and it makes sense. The biggest secret in venture capital is that the best investment in a successful fund equals or outperforms the entire fund. One more time. The biggest secret in venture capital is that the best investment in a successful fund equals or outperforms the entire rest of the fund combined. And Thiel's referring to the power law of returns, where the majority of early stage investments are made on the presumption that most of the portfolio will inevitably fail. And that's true. I think we can all agree that 5,000, 10,000 different crypto, we can't all make that. Most will fail, right? Yet a single investment could enable the fund to meet its return hurdle. So again, there's different strategies for everybody. It depends on your risk tolerance. And right now, I've done pretty well since 2017, just dollar cost averaging. And now I think it's time for myself, not for you. You do what you do, but 5%, I'm going to start to get a little bit more riskier. And it really comes down to this, the power law curve. And VC funds, they don't follow a normal distribution. They follow power law. Power law curves when the distribution of returns is heavily skewed, or simply put, a small percentage of firms captures a large percentage of industry returns. So again, the few returns or the few cryptos will give you the highest return because they can't all give it to you. The greater ones will give you the less, or the ones that you have most of. Let's say you have 100, you invest in 100 cryptos. I don't know why you do that, but whatever. You're not going to get a lot of returns on 99.9%. Hopefully you just get that 0.1% that does pretty well. That's the power law curve. So that leads me to the last point, my 5% plan. Now, what I'm trying to do here. So real quick, got the second channel, Dan Degen. We talked about this project. You can find it over there, Fame MMA, and getting into it and why I think it's going to be good. It talks about, I think it's going to be good because it has such great utility. You get a percentage off for pay-per-views. And first of all, Fame MMA is good because like it's mixed martial arts based in Poland, but they use a bunch of like influencers and TikTokers and YouTubers and ex-UFC fighters, and they pit them against each other and they fight. Everybody likes to watch fights. Not everybody, but some do. It's a multi-billion-dollar company. But for the token, percentage off pay-per-view, gaming, sponsors, fighters get paid in that salary, merchandise, franchise, NFTs, promos, staking, referral links. That's just one of them. And then what I want to do is I want to have accountability, because I can't just show you this and you'd be like, ugh, Rob's just talking about some random thing. I want to, let's put some money in the game. I already have skin in everything I talk to you about. Also, I'm super biased because I own everything I talk about. If I'm talking about Bitcoin and Ethereum and Solana and Cardano and Avalanche, it's probably because I buy it. That's just it. I'm just being honest. But in every one of my videos from now on, under strategies, I say the 5% degen plays. You can click on this. It's going to go to this spreadsheet. And over on, it used to be called Dan Clips. Now we call it Dan Degen. I called it Dan Degen because people are like, that's not a good name. Well, it's a name because I need you to know that it's risky. It's risky. So like that channel, all the stuff that's there, you have to do your own research. I mean, I'm going to do the best that I can do. I'm going to tell you what I'm investing into, but you can't come in here and say, well, Rob said it, so I'm going to do it. That is a recipe for disaster. This is your first starting point. So what I try to do is I'm going to get into the early different projects and go from there. So Gensukishi was one of the first ones that we talked about, because I've been doing like reviews of products that have already been out. I don't really want to do that anymore. I want to go into like the newer stuff, new to really get in early, just like what we were talking about before. So this Gensukishi, the review date was December 15th, 2021. Here's the link. You can verify that date. The purchase price was 0.015. Here were the tokens, 333,000. That's how much they allowed me to buy into. Because every one of these projects I talk about, they don't pay me a dime to talk about it. And one of the reasons I do it is because the people that bring me these projects are people that I trust. Because I get 10 offers a day. These are the ones that some contacts I've made in Puerto Rico and different places are like, this is the next big thing. And I bring these to you. So just so you know, all these things that I invest into, they don't pay me again. I put skin in the game. And also everything I talk about, because the tokenomics, and you can watch the videos, I talk about the tokenomics, about not getting dumped on. Like I have a lot of these tokens, but it's over, the lockup phase is over 2 years. Same thing with Everdome. Lockup is, I know it's over a year. And the next one, Fame MMA, it's going to be a lockup between 1 and 3 years. So I and a bunch of other people can't. And also the purchase price, I can't buy like $100,000 worth of it. They don't let anybody do that now. It's you're capped at certain amounts. Sometimes it's 1,000, sometimes it's 3,000, but it's never that high. But you can get enough when you go in early. So again, here's the links. Here's the price today. Here's what I got. And this is what I'm going to do moving forward. And the next thing I'm going to do is my next dive I want to do into is step-in. Unfortunately, it's kind of early, but not really that early. So whatever. But it does look interesting. So I'd like to talk about that. Again, some people have brought this to me, and that's what we got. So look, that's it for today. I know it was a lot to go over. And I know some people are like, oh, well, Rob's going to go all degen. Nope, that's 5%. And all these products that I talk about, I won't talk about on this channel. I'm only going to talk about the news stuff. Now, if some of these projects really blow up and they're in the news, I'll talk about them. But that's what we got. So let me just think about that in the comment section. Let's go into the Q&A and go from there. Comments. Let me get rid of the banner. All right. So Leroy says, if you get a loan and the market goes up, they give some back. So this is from my experience. When they wanted me to over collateralize with Ethereum, I collateralized and then they would give it back to me. But there has to be a loan to value ratio. So whatever you put in, that's the static one. If you have to over collateralize, They'll keep it until it gets back to that ratio that's acceptable to them, 2 to 1, 3 to 1, 4 to 1, and then they'll put it back. So yes, that's only if it goes up. And, as time goes on, sometimes it just keeps doing, dum. It gets pretty like, damn it, I wish it would keep going up a little bit. Science, is that easy to set up? I don't know. No. And here's another thing. So I was talking to my friend Alex about Fame MMA, and he said, this sounds pretty good. And he's like, I'd like to get into it. He's like, have you ever been wrong? I'm like, yes. He goes, have you ever lost all your money? I'm like, absolutely. When I first got into it, I lost a good amount of crypto, either through my own stupidity or, just a basic rug pull. And what was the one that he's not Orion, one that I talked about before. They did some kind of like, damn, I wish I could remember what it was, but it was one of those tokens that I talked about before. And then like, I just stopped paying attention to it, and they go, oh, we're going to go from this token to another token, and it's going to be a swap, not Voyager, something else. And I lost it all. Lost like $5,000. So, yeah. Yeah. And then it takes a real skill. You know what it does? Like, I was talking to another guy last night, Mark. His fiance runs one of my the sports complex here for us. And chiropractor, real nice guy. And he just talked about how like some of the people that he works with, they make a lot of money, but they spend a lot of money. He's like, yeah, all of a sudden they have a new car, or they talk about the new house and whatever else. You know what really comes down to is living below your means and just not going too crazy. And then whatever asset that you buy, make sure that asset actually is a revenue generator. Lambos don't generate squat unless you rent them out, I guess. Houses don't generate anything unless you rent those out. And then investing in yourself actually is one of the better things you could possibly do. All right. Softcore degen. Yeah. Here's a good question. What if I have 4 SOL? So like on that Phantom wallet, it's super easy. You open up the Phantom wallet, which is, you can either get it on iOS or Android, or also on desktop. You click on that. You click on how much you have. Like I had 0.8 SOL. I clicked on it, and then it just says choose your delegator, and that was it. So you can do it with almost nothing. That's right. Butterbean is a part of Fame MMA. Cadena seems like a good deal. I don't know what that is. I've heard of it, and I've heard 2 sides of it from. I know George loves it. I know James hates it, and I haven't done my own research. But I got other things to do. I probably won't touch it because got too many things going on. There's so many different products out there, and most of them are going to just implode. But it's all about time now. Oh yeah, big time. The game that looks really good actually. Those graphics look great. Thoughts on Phantom? I own some, and it's only because it's a hedge against everything else. Like I said, like I don't know if Ethereum's going to win. I mean, we just pushed back that merge from Q2 now to potentially Q3 and Q4, and we know that it won't deal with the gas fees. So we'll see how it works out. But I mean, there's still a lot of total value locked up as far as DeFi, and they are the second value locked up as far as staking, even though they have 9% staking. But they are deflationary, and they do have first mover advantage. I know some people don't really think that's a big deal. If they just, let's be honest, if they just fix those gas fees, how much farther ahead would they be? And I'm pretty sure they can do it. Money does that. Market share does that. Happy Easter. Is Luna a hold? Yes, I'm still dollar cost averaging into it, matter of fact. That's it right there. Mason said it. Zero exchange. Those are the guys that pulled me on it. So again, that's one of those ones that I'm like, I just didn't pay attention. And it was a very easy thing. Token swap for 0 to something 0, just lost it all. Yeah. Yep. Nobody's perfect. Can we propose some tokenomics to analyze for the DGen channel? Just watch those last 3 videos. the Genso Kishi, Everdome, and Fame. More specifically, Genso Kishi and Everdome. I really went deep into the tokenomics because I've seen projects where like VCs and private rounds are like 50%. You just get dumped on for that. That makes no sense. There's like no lockup period. So just take a look at that, and because it's all depends on the project itself and the people that are involved. Have you come around on SHIB yet? No. But I mean, if you make good money off it, congratulations. I'm going to miss more opportunities than I can dream of getting into. That's just how it goes. ETH will be coming out. Only time will tell. Listen, don't forget, Amazon at one point was losing to eBay. Amazon came up. It was crushing everybody. And then it all of a sudden just went down because it started to grow and they had a lot of growing pains. They were trying to put a lot of money into globalization. And as far as like paying and purchasing and getting all those warehouses and then growing the infrastructure, they took a big hit for a while, but it worked out pretty well. Again, eBay is still pretty good. You still can use that, but that's how it goes. I think that they probably do pretty well. Where to buy Fame? You can't buy Fame right now. So that's just watch the video. It's not even out yet. That's how early it is. So yeah. I mean, you can get into the privates. It's not even a private sale anymore. It's pre-sale. Yeah, Jeff is definitely on some TRT. Nothing wrong with that. Little TRT, little HGH. At some point, I will need that myself. Great. So Wesley says, hey, Rob, do you think Bitcoin will surge over this tax period? Makes sense. I think some people are selling for taxes. But again, I always thought that April was a bad month, a crappy month. But in the past, and you can take a look at Ben's website, and he lays it all out there since 2010, April's a pretty good month. April and May are pretty great months, and then it kind of slides off in June, which is why that old saying, sell in May, go away, it does make sense, and you can see it. And that's it, guys. We're at 37 minutes. I think that's a little bit too long, so I'm going to cut it short. I'm going to cut it adequately, and we'll get out of here. So look, if you like today's video, give it a thumbs up. I know it's a little bit different what we talk about, but it's something to think about. And it is the news because, I mean, with Alex talking about where things are going, maybe people only have one option, and that one option is crypto. Maybe everything is so overinflated they do get into it. Man, I hope he's right. But it's just something for you to consider. Anyhow, thanks for watching. I appreciate it. And I'll see you on the next one. Adios.